Well, the headlines today are mortgage demand for homebuyers drops to a 28-year low as rates soared. So that's what we're going to talk about. But we're going to talk about in a little bit of a different context. So because of this data, because nobody's buying houses because of rates, are home values plummeting or where are they? That's what we're going to talk about today. So my name is Dan Free. I do this report on a daily basis to keep you guys informed what's going on with real estate. I don't really know what's going on with home prices. Why? Well, because they vary all over the place. If you're in the West Coast, you're probably going to see maybe up to a 10 or 15% pullback. If you're in the Midwest, you're actually seeing an increase in values. So it depends on where you live. But what I'd like to focus in on where mortgage rates are and different programs that you might be able to utilize if you're looking to buy a house in 2023. So right now we see mortgage demand and that is actually plummeting. Why? Is it because nobody wants houses? Well, that might not be the reason. That might be, but it might not be the reason. The big reason is there's just nothing out there. Let's explain why. So what's going on right now on the sidelines is, I know I beat this to a dead horse, is people that have a home like myself. I've been in my house for 22 years. My rate on my house is 2.5%. Would I like to sell? Not really, but if I had to sell, could I sell? Yes, I could sell. But what am I going to do at that point? So people that are in a house now that's been in there for the last 3, 4, 5 years probably have a rate of 4% or lower, and they're probably not going to move. And I'm going to show you that here in a second. But with this data, since there's really nothing on the market, we only have a 3-month supply of housing in most areas. Well, that represents basically a seller's market, okay? Meaning that sellers don't have to reduce their prices to basically give that house away because there's nothing out there, folks. So let's get into the data. Let's go through here and just explain this. First thing we're going to see from the economic calendar today is the only data we have out so far today is building permits. Came in right in line. The last reading came in at 1.44 million units. Analysts or economists were expecting it to come in at 1.442. It came in at 1.443. So is that a big difference? No. Okay, so there's houses being built, but let's go over to the other section, mortgage foreclosures. So what also supplies housing to the market are foreclosures. Now you might see mainstream media and YouTubers out there saying, oh my God, foreclosures are running rampant. Look at the increase from last year. But if you really analyze the data, foreclosures are basically at a record low. Okay, they're coming off some lows. So let's go through some of this data that we have here. When you go down through here, this shows you a lot of the data, but let's just go down through here and just look at basically the breakdown of things. Early stage delinquency, 30 to 59 days late, 1.3% up from 1.1 in May of 2022. So, okay, the early stages are up 0.2%. Okay, I'll take that. Adverse delinquencies, 0.4 up from 0.3. Okay, but you just see these are points. These aren't even, 2, 3, 10%. These are fractions of a number. The next thing, serious delinquencies, 1%. Down from 1.3%. Next thing over here is foreclosure inventory, 0.3%, unchanged. Transition periods, 0.6, unchanged. Okay, so a lot of the data when it comes to foreclosures isn't really painting the picture of dismal things going on. The next thing we want to look at is before you go into foreclosure, people in the past and people in the last few years have filed for forbearance or assistance. So what happened during the pandemic is people could file for what's called a forbearance. It's like your student loan deferrals. You didn't have to make student loan payments for the last 3 years. Well, if you had a mortgage issued by Fannie Mae or Freddie Mac, and most people did, probably 90% of the people out there that have mortgages do, basically you didn't have to make a mortgage payment for 2 years. But people continued to stay in this program just because they're like, we need help. We still need help from COVID. So they're getting it, and they're getting it in droves. But what this is also showing us that a lot of these people have come out of forbearance, and they're okay now. So let's go through here. The MBA estimates about 195,000 homeowners are in forbearance plan. Let me get my head out of the way so you guys can see this. Plans. Mortgage services have provided forbearance to about 7.9 million borrowers since the pandemic. There's 196,000 remaining. That's how many people got helped. So you had millions and millions and millions of people that got helped. These people otherwise might have went into foreclosure. That would have pushed in 8 million homes to the market. You have 8 million homes added to the market. That would cause prices to crash, okay? Because you'd have way too many houses to be absorbed with today's rates and today's programs. Okay, so that's why a lot of people don't understand the number of units in housing is bottom. It's crashed. Values are not crashing because there's no inventory. So if you do want to buy, unfortunately, you have to buy into this market where we only have a 3-month supply, which is a seller's market. You can be picky on who you choose and what you sell for. That's why you're not seeing a housing crash. A lot of people don't understand this. When they look at crash, they just think, oh, prices have to crash. But no, the number of units are basically dismal and they're falling off the charts. So if you're out there looking to buy a house in today's market, you don't have a lot of competition in many, many areas, and people are still getting good deals. Okay, so that being said, let's get over to the next piece of this puzzle. Where in the heck are mortgage rates going from here? So what we can do is we go over and see what the Federal Reserve is going to do at the next meeting. So what we look at is we look at the CME. It's a Fed watching tool that they have. It's basically the futures market saying, what in the world is the Fed going to do at the next meeting or next few meetings coming up in 2023 and 2024? Yes, we're right around the corner from 2024. So we go to the CME Fed watch tool and you go down through here and what is it? Well, this is the likelihood that the Federal Reserve will change rates at the next meeting. So what's the prediction is? There's an 86% chance that they will not increase rates at the next meeting. So going forward, what's that guidance look like? Well, let's get over to here. Let's look at the probabilities, what they're going to do at the next few meetings coming up. So we go over to here and we look at this chart. You're looking through here and the probabilities are, let's go down through. At the next meeting, 85% probability it's going to stay right where it is. Right now, we're at the 5.25 to 5.5 range on the federal funds rate. The expectations are that they're just going to stay there throughout throughout this year and into 2024. Now, guys, this is telling us, well, the Federal Reserve probably is going to start reducing rates May of next year. Well, let's see. This is just the probability charts. Let's get over to a dot plot. And what this dot plot is basically the Federal Reserve members, when they sit down at each meeting, they go in and they throw darts at a board on where they expect rates to be in 2023, 2024, 2025, and out there further. Okay. Right now we're in 2023. You can see up through here, we're currently at 5.25 to 5.5. So the Fed is expecting to raise rates 0.25%. When it's going to be, I don't know, because everybody's telling us it's not the next meeting. Okay, so they're expecting rates to be about 5.5 to 5.75. That's where all these dots are putting us. And guys, remember, these dots are issued by members of the Federal Reserve. They sit down there and say, here's where I expect the federal funds rate to be. Well, again, the Federal Reserve also members said, where do we expect rates to be in 2024? Here's where they're expecting. Where are the most dots? You go down through here, it's at 4.25. Okay, so if we're at 5.5 now, and the Fed is expecting us next year in 2024 for it to come down to 4.25, that means they're going to reduce rates by 125 basis points. That's 1.25% or maybe even more. So that's why everybody's saying next year, you might give you the opportunity to refinance if you're buying into this market. I'm just saying, I'm just trying to give you some context on where mortgage rates are supposed to be or rates in general. This is actually issued by the Federal Reserve. Their members have come up and put this chart together. So based on the information we have today, what in the world's going on with the bond market? So what you have over here is, let's go to this. And what you're seeing on your screen is basically the existing home sales. This is another area where I said existing home sales are off the charts. There's nothing out there. Look down here. There is basically nothing on the market when it comes to existing homes. So let's get that out of the context so we can dive into this. What you're seeing right through here are what's going on in the bond markets. So what we focus in on is right here. This is an MBS. Okay, what is MBS? MBS is basically a mortgage-backed security. It's a bond that trades on Wall Street, and this is what's going on. It's at 97.75. If you squint real hard, this bond price is up 38 ticks. What does that mean? Well, it's great news for mortgage rates. When this number goes up, the price of a bond goes up, rates come down. So this should be at least 1/8% lower in rates coming out later this afternoon. Where rates, or where did they finish yesterday? Right here, all-time high. Well, not an all-time high, but a 52-week high. And we haven't seen these rates since I was probably, well, in the 90s when I first started in this business. So these are the top 6 products people use when they're buying or refinancing a house. I did get a question yesterday, or multiple questions. Dan, is this an FHA rate if you're putting 20% down? Well, no, let me break this down for you. I did some research. If you're looking at any fixed rate or ARMs, not the government loans, which is FHA and VA, these loans right here, the criteria behind this are these, okay? This is basically if you're buying your first house, okay, it's your primary home and it's a single family home. So this is for first-time home buyers buying their first primary house. If you have a 740 credit score and you're putting down 20%, no, you don't need to put down 20%. In most cases, if you're a veteran, 0% down. If you're looking in a rural area, most likely you can get a USDA loan, 0% down. If you're a first-time home buyer in most programs, you might need as much as 3% down, but we do have a program that only offers 1% down with no PMI. If this is confusing, check out this video right here. You can check that out, and I'm going to give you my information at the end of this video so you can reach out to us. However, when you're looking at FHA and VA, all the criteria is the same, but you only need on FHA 3.5% down and VA 0 down. So those are where how this is broken down. Again, this is rates issued by Mortgage News Daily. They survey lenders all over the country. These are the averages out there. The next thing we want to go to is if you're interested in all this news and you're kind of a geek when it comes to this like me, please subscribe to my newsletter. It's down below in the description. It's free. Don't sell the data. You're going to get daily reports and the end of the week report to summarize what's going on for the week. And then I also want to show you guys a website I created a couple years ago. Why? Well, because most people think they know what their credit score is. I said think, but they really don't know. Do you know you have probably over 50 different credit scores? And there's also 2 different systems. There's a Vantage score and there's a FICO score. Huge difference. The Vantage score is basically, let's say it's a training tool or it's an assistant tool. No lenders use it when they're trying to qualify. If you're trying to qualify for a car, credit card, or a mortgage, we use your FICO score. So what you can do is you can scroll down through here, and this is pretty cool. You get a free credit score. This system is going to launch you out to a free system. Don't sign up for any of the bells and whistles. The free system is absolutely good enough. Right here, this is what your true credit scores are. So if you click that, what it's going to do is it's going to take you over to your FICO scores. If you use this link, you're going to get 20% off. But if you also go in here, there's another system in here that I use personally. It's down through here. It's called Smart Credit. It gives me alerts. It gives me what if simulators. It gives me a ton of stuff. There's a free 30-day trial. Check it out. If you like it, keep going with it. If you don't, go ahead and cancel. There's nothing in it for me. I'm just trying to provide this information for you. But if you're out there and you're like, Dan, I really need some assistance when it comes to buying or buying a new house, or maybe refinancing, or maybe getting a home equity loan because you're buried in debt, but you have a ton of equity in your house. Well, go to the rate update, and here it is. So if you'd like to check us out or schedule an appointment with us, hit the Apply Now button. We do something a little bit different. When you hit the Apply Now button, you're not going to be launched out to an application. What we're going to do is set up a consultation with you. Some people are like, Dan, I really don't need a consultation, but you probably do. Do you know your FICO scores? Do you know exactly how much money you make and how can that be qualified for a mortgage? There's probably a bunch of things in there that you probably don't really know about. We'd love to have a consultation with you. And then once we go through it, we'll be happy to send you the link. Or what you can do is just give us a call. Let me give you all the information down below right through here. If you'd like to reach out to us, you can give us a call at 844-775-5626. Or if you have any questions, just shoot me an email. Love to hear from you, and I'll get right back to you. So thanks for watching this video. I'm going to ask you 2 things today. 1, if you like the video, give me a thumbs up. That's all I ask. 2, if you like the content on my channel and you find value in it every day, please don't forget to subscribe down below. So every time I post a video, you get an alert. Thanks for watching, guys. God bless. Have a fantastic day and hope to hear from you. See you soon. Bye-bye.